Powell and Co. I'm sure you've all had a look at that overnight. Main data today, or main announcements today, has been from the Swiss National Bank and the Bank of England. Swiss National Bank was up first, and they were talking about. Well, yesterday, remember, the US accused Switzerland of being a currency manipulator. Mr. Jordan, the head of Swiss National Bank, was having none of that this morning. He was talking about, obviously, a particularly strong Swiss franc. And what was the phrase he used? I'm writing it down. The highly valued Swiss franc, not afraid of direct intervention. So obviously comments on the COVID crisis and the effects it's having on the Swiss economy, but also talking about consumer prices, being quite subdued for the next couple of years, and the Swiss value of the Swiss franc not helping that. So key economy, key currency, the Swiss franc, obviously small country, small economy, but very key as far as the markets are concerned, particularly the Forex markets. Later, we've just had an hour or so ago, we had the Bank of England again with no surprises from the Bank of England. Remember, the Bank of England are double handcuffed because of the Brexit situation, or the Brexit trade deal or no deal that's going to happen or not happen with the European Union. So no change again from the Bank of England. And again, all central banks are sort of spinning the same tale, that they will act more if they need to. No new bond purchases from either the Swiss or the Brits today. Brit purchases remain at $895 billion pounds. Rate remains at 0.1%, so very, very close to this key zero rate. Negative interest rates again wasn't mentioned in the statement or at any recent comments from any of the key central bankers in the UK. And what was the other thing? Yeah, the vote. That was the other thing. Obviously, very much a 0.9, all in line with expectations. So 2% inflation expectation potentially by the spring. A potential big bounce in UK inflation as the cost of energy starts to drop out of the equation come March next year for the UK. So that could be on the cards and one to watch going forward. I mean, both the Swiss, the Fed leaving last night, and the Bank of England this morning. Sorry, I'm just here. Right, sorry, guys. I didn't have my chat on here. Good afternoon to you all. Hope you're well, guys. Anything you want to talk about? Any asset you want to have a look at, please let me know. I'll just finish this little roundup of the central banks. So, as I was saying, the Bank of England very much expecting this bounce in inflation, perhaps more so than other economies, simply because of the way they're accounting for it, and this energy cost that drops out come the end of the typical UK financial year at the end of April, so it's the end of March time. But no action really, and I said that again today. Until this 2% inflation is sustainable, we get back down. We're still quite a long way from that, but we are expecting a spike to it during the spring and the first quarter of 2021 for the UK anyway. And obviously the key thing obviously remains, as far as the UK is concerned, is obviously this relationship with the EU, its nearest and biggest trading partner, going to WTO terms in literally less than 2 weeks. It's the 17th of December now. It comes in on the 31st of December. Or the 1st of January. The UK government are saying they're not going to extend it at all. So the negotiations go on. The political decisions need to be taken by the leaders of both sides, whether they're going to get a deal or they're not going to get a deal. But anyway, enough on that. We've talked about it for many, many times. Obviously, let's have a look at the market. So first up is Ravi, who's asking about gold. Ravi, let's get rid of me. Let's bring up the charts. Let's just get rid of me. There we go. We don't want that, do we? We want that. There. And there we go. So Ravi's asking about gold. So gold has held, if we look at this daily chart, Ravi, I don't know what time frame you're interested in, my friend. But gold on the daily, this is the daily chart. So we had this shakeout. This is the daily chart. This is a big move down in November. So we had this move down under 1800. and we spiked to this 1750s, 1765 zone. So that's our key support there. That big two, see the red orange line and the yellow line there, that's 1800 on the daily support area there at the beginning of December, end of November. That's the 200-day moving average. And then above that is a little $20 channel, which takes us to 1820, which is where we spiked to earlier this week. This red candle here, we went down here on Monday in to test this 1820 zone. So going forward, this is our support area now. And as you can see, this week, we're a bit higher than that at 1825. So there are three support areas at the bottom. So Tuesday, big positive day. We breached and broke the key 1850 handle. And then Wednesday, we move forward. And again, today, we're now back over the next key resistance, which was the 50-day moving average, which there we are now, which today sits at R1 level at 1871. So we've had 3 strong days for gold going forward. So the daily time frame is on the up. If we come down the time frames, Ravi and everyone else, you'll see how the trend has broadened and broken. So here, it broke here on the 4-hour there on the morning of the 15th, where are we now, the 17th. So that's been trending higher ever since. It's still above that 9-period moving average, so it's still positive. It's still going up. So 4-hour traders are long, and the 1-hour traders will have been short and then long yet. So they went long again here. Last long position there was the 16th last night, and we've tracked over the 20-hour above the 5 and the 9 and trending higher, and over the R2 level today. So going forward now, our next R3 level, the R3 level today takes us to 1892. But remember, these extremes, these R3 and our S3 levels, they only get hit, 5 or 6% of the time. So we've had a strong run today. We stalled a bit at R2, as you might expect, but looks like we may be running out of steam. But obviously, we're still an hour ahead of the US Open as we get towards the end of the trading year. And this is the final full trading week. Next 2 weeks are reduced weeks. Obviously, right, there's lots of questions coming in here. So hello, everyone. Cooper. Euro Swiss weekly and daily time frame, please. And thank you, Cooper. It's no problem. So Euro Swiss, obviously we've had the Swiss National Bank today not really having a big impact on the Swiss franc. Remember yesterday, as I said yesterday, there was the United States Treasury, part of Donald Trump's leaving presence for the trading world, talked about Vietnam and Switzerland being currency manipulated. So Switzerland immediately asked for a meeting with the US officials about it. But as I say, the Swiss National Bank statement sort of shrugged it off a wee bit this morning. So Euro Swiss weekly and daily. Let's start with the weekly then. So you can see it's very much a sideways action here in the daily. See that we're capped here at 108.50. And we've been down there and we've bounced back up. But let's have a look at the weekly first, is what you asked for. So again, more compression here. If I zoom this up. So we spent 2019, 20, and most of 2020 moving down into this floor, and then we've moved up. So we've got a bit of a, here on the weekly time frame, that's the last big leg downward, took us to 106, 70.50. That's our floor there. But again, on the weekly time frame, we haven't really been able to breach and hold over the 108.25, probably 108. So I zoom that up a wee bit. So that's our weekly channel we're in at the moment. And we have been since May, basically. We sort of went as high as 108.50, but topping here, this 108.25. So that's where we are now. We're at the top of that channel. So previous action would suggest that is perhaps spiked through intra-week, but it hasn't. This week so far, so it's relatively positive. We're above the 20-week moving average. We're also above the 50-week moving average. So from the move down the last 2 weeks, we've bounced off there very significantly this week. So Euro's up, Swissies down again in this pair. So we need to break 108.25 going up. So if we zoom this into the daily time frame, you'll see sort of a bit of spike through this top weekly resistance level here, and see what the daily's doing. So again, daily a bit choppy, moved up into that weekly resistance of higher resistance there, 108.50. So there are two levels we've got to. So we're approaching that now. Okay, so we've had a strong, our support's moved up to the 200-day moving average, the 50-day moving average. So that's our key daily support here is there. Let me make that a different color. So you can, it's not the yellow, so let's make it a what will stick out. Let's make it a bright green. If it, hopefully that'll. So this green area here, where the between S1 and S2, let's close that. It's our daily support, 107, 107.57. So call it 107.60 Cooper on the daily. So two strong days today, but I'd like to see it break this 108.23 if it's going to go higher. If it is, next resistance will be this 108.50. If we don't break this today, we're still down here. The parabolic sales about to flip, so that's a key. We're at really a key level. So looks okay. We're over the 20-day moving average, but here, as far as the moving averages are concerned, it's not really trending. So we're just going sideways. That's not really helping you. You can see that from the MACD. We've moved up with this big move here, then we've looped down. We're really sort of, the RSI is pretty good one there. We're sort of moving down, but RSI is moving up. So there may be some more legs in this. We've got strong 2 days for Euro Swiss. So a break of 1.0825 could take us to 108.50. If that doesn't happen, which has happened many times here, we could be moving back down to where, say, the daily pivot is 107.86 and the bottom of the channel at initially the 50-day moving average, which sits at 107.77, and the 200-day at 107.58. Okay, so that's a weekly and daily on the Euro Swiss coupon. That's answered your question. Ravi, good afternoon to you. Noah, inbox me. Okay, whatever. There's people having conversations here. That's very good. Lynn, hello. There's lots of people speaking to. You're all speaking to one another, aren't you? Just ignoring me. Very good. Joey, gold momentum looking bullish. It certainly is on the daily basis, Joey. As we just said, let's have a look. Let's go to this same setup here. Commodities. It is looking relatively bullish. As we've moved out. There we go. So as you can see, that these higher lows, these lower lows were still in play until the end of November here, and we've turned around. But have we broke this downtrend? Possibly. It's difficult to tell. I mean, you would argue that this is the key area, as I always, I tend to, the Bollinger Band, a good example. We've nipped in here. We're playing with a 20-day moving average. And then we've had 3 strong days. So 3 strong days at the moment. Is it going to turn around this trend? It's probably too early to tell, but we have breached. We stalled at the 50-day 3 days last time and then moved down quite significantly, but had support at the 20-day. This time we've gone to the 50-day and broke through it today. Obviously, we can't do anything with today's candle as a end of day trade because it's not completed, but certainly that looks like a 3-candle, white soldier pattern there on for all us candle aficionados, end of day today. So see where the week closes today. So that's looking relatively bullish. But certainly intraday, Joey, it's very strong. I had a very strong day. Good start to the day, breaching that previous resistance 1863 and over 1850 earlier in the week. Actually, it's a different chart, isn't it? I haven't got it on, but 1850 is here. This is the 1 hour. Sorry, let's take to the daily on the high time frame. Moving up over 1850. The 4 hour breaching over this 1860 area. Today's high is above yesterday's high, which was a significant rally. Sorry, not what I'm talking about. This is the 4 hour. Sorry, this is the previous high we had here at this 1860 area has been breached, and we're here now at 1875, 1877, moving up. So 4 hour key support is at the daily pivot and the 200 hour there around 1858, and the daily pivot sits there at 1858 as well. So it's a key support area for 4 hour traders. And I say the daily time frame, 3 days up by the looks of things. Obviously today isn't completed, but certainly 2 strong days and breaking above that 50-day moving average there, and that high from earlier, late last week. They're at around the 1870 level as well. So the breach was the big move over 1850. Sorry, yeah, 1850. We'll see if it follows through as a delayed reaction, but certainly Bitcoin seems to be getting a lot of alternative gold traders recently. Angelina, hello. Anything you want to have a look at? Let me know, guys. Hello. Marianne, hello. Hope you're all well. Alex, hello. You're all chatting to one another as well. I won't put them all up. A lot of you chatting to one another. A lot of everybody saying hello. Okay, so if there's no more requests for actually analysis of charts, that doesn't look like I think I've caught them all at the moment. Looks like it. Facebook, YouTube. Yep, looks like it. Looks like it at the moment. But let's see if there's anything on here. Nope, nothing on there. So let's go back. Okay, so let's just go back to my intraday charts. Intraday charts here. Who was last up? Let's feel this was last up. Hello, sir. Hope you're well. Let me just let my chart review. So that's gold on that 1 hour. Just to finish off, this is different chart setup, but it's still got the moving averages on and the Bollinger Band. You see this 3-day here, a bit less exaggerated, but it's that key, that key big. The blue line there is that 1900 level for gold. Jan, hello. And then moving to the upside with this big support of the 1820. 1850, which we breached on Tuesday, followed through yesterday over the 50-day and to the upside. So the 4-hour daily, quite a nice one. If we look at the weekly though for gold, it's still relatively weak. It's still sort of moving down. The weekly would need to breach that 1900 level. So the end of the week would nearly break. So only a couple of weeks left of the year. See how that pans out. But it's had a very good year. Remember, gold, a very, very good year. So some profits being taken earlier in the session or in the month. So let's just go back to the main crosses. So euro against the dollar. Dollar remains very weak. The Fed didn't. I mean, yesterday we had this pop as the Fed announced that it came out with their statement, and then during we waited half an hour for Jay Powell's press conference. Excuse me, all it is. For Jay Powell's press conference, and then we've just it popped and then dropped, as I said this morning. So we were all the way. What am I talking? I'm talking rubbish, aren't I? We popped. The dollar rallied initially down to this. So the euro fell to this 121.30 area, the 200-hour moving average, and then we just regained our rally today, and into close it was strong, and then we just rallied over 122 today, and it's just continued to rally. So up we go. Right, we've got another request coming here from Said. Said's asking about pound yen. Last time I looked at this, it was having a bash at 140. I don't know where we are now. Yeah, 140 we breached earlier. So this is the 1 hour chart for pound yen. Said, I don't know what time frame you're interested in, but as you can see here, the strong steady gain over the last 3 or 4 days. Our 1 hour trend chart has that 200 hour there at 139. So big round support there. The 200 hour moving average and the psychological 139.00, big round number. And it's betwixt both S1 and S2, right halfway between, as you can see there. The 4 hour, again, here gapped up earlier at the beginning of the December the 11th. It hasn't really looked back since then. We sort of came down here with some support, a lower around about 138.70, 138.80, something there. Yeah, 138.50. In fact, that support was there in the 4 hour. But it's certainly the 200 period turned, 20 period, I should say here, turned towards the end of the 15th a couple of days ago, and then it's just rallied continuously. So through 138, through 140, and here we are right to today's R1 level at 141.15. Next level above takes us to 140.55, and that is still, well bid. Look how the moving averages are aligned. We got the 20 nicely sloping up. We got the 9 and the 5 here. That's what these moving averages are here. This is the midpoint of the Bollinger Band. See how the Bollinger Bands are starting to move up? We've had this nip in here. See how the squeeze? The lower Bollinger Band came in. The upper Bollinger Band came in as well. So we nipped in, and then as we got to 140 because of this congestion here, and then we burst through 140. So where we would go from here was, you can see here that R2 level is a nice level, target level, which takes us back to where are we? This is all the way back to the beginning of the month there. So again, another one that's well bid on the for the 4-hour traders. For the intraday, for the 1 hour and slower traders, I don't know what time you're interested in. Saeed just said 1 hour. Sorry, so there we go. 1 hour. So this is where we started, I think, Saeed, wasn't it? So there we go. It's still, it's still relatively bid. The 20. See how the 20-hour, the green line here, the mid part of the Bollinger Band, has kept this support. So it's a nice trend again. Nice slope on the chart. 20 has been tested and held. So that's just trending higher. So a nice sort of movement up and down, not in a straight line. Nothing goes in a straight line forever, but that's trending higher. And again, the 1 hour intraday obviously got some stronger resistance at this 140.50 level. If I zoom that out a bit, there we are. So we spiked through it this morning, earlier this afternoon, I should say. That we came back through it, but we're still, so we've got support here at the 20 period moving average, which has provided great support, hasn't it, over this week, basically. So that's a fairly strongish support there, 139.90. We finally got to this. We've broken 139.00. We've ran to 140 already. So again, that looks still big, but again, we're consolidating at this level. So it'll move forward. We need to break and hold the R1 level. If we're going to move down, we'll need to break that 20-hour moving average, which is beginning to flatten out. See how the slope is sort of curved. So we're running out of steam, potentially. Momentum. See, the MACD is suggesting there the signal line. There's the histogram is just pivoting above the signal line as we moved up, and then it's just messing about with it a bit. The stochastics moved down a wee bit. RSI moved up into the 70, and then it's dipped down, but it's still relatively well bid, really, on that 1 hour time frame. Saeed is the short answer to that rather long explanation. Where was I? That was Saeed. Next is Thambo. Blumfontein. Hello, Blumfontein. Hope you're well. Hope you're enjoying your summer. Hope you're staying safe. Hope to see you soon. Next. Oops, I moved too quickly there. Angel was saying, what was Angel? Angel was just saying hello. Peros, hello. Angel. John Shirley saying analyze pound against the dollar. That's the cable, remember, on the 1 hour time frame. Well, again, last time I looked at this, it had breached the psychological huge 136.00. So it's rallying on expectations of a trade deal. Quite often can get ahead of itself, but it's had another one that's had if you take to the daily time frame, you see what a very strong November, December, October it's had, from these lows down here, excuse the mess here, at 127.50, and just sort of moving down quite aggressively. We've recovered that level here from the summer when we went to 134, and here we are 135 and 136. So again, the daily time, very, very strong week this week. On expectation that there will be some sort of deal, excuse me, with the EU, but very volatile. It's very, very news driven. Be careful trading any sterling across it, any sterling cross, particularly the cable cross. Look at the length of the wicks here on these daily charts, daily candles. It's very, very news driven. So be very, very close to the news, especially if you're trading on the 1 hour time frame, because news can breach out or leak out early. So be careful of that. But again, if you're trying to follow this as a strategy, again, it remains bid. Over its 20 hour here. This was back on the where's that 15th? It's rallied quite nice, and again it's held up. So you would have been in that one. You would have come out there as it's gone under the 8 period. It's held the 20 period. It looked like it was going to go short there. That would have signaled a short on this trend following strategy, but it hasn't happened, does it? It didn't go down. So your stop loss would have been really up there, but we're back over you're out of that very, very quickly, because you're stopped out there, here at the close on the 16th, and it's taken you long again because you've gone back over the crossed again, the crossing EMA strategies. So that's, again, you've been long from last night. 1 hour traders here using this trend following strategy from whatever that was, 135.08, and that's just kept you long to 136 plus. So a very nice 200 odd pip or 100 odd pip move for you there, just following that very simple trend following strategy there on cable. But as far as going forward, which is what everybody's interested in, know what's happened. So we've ran to R2 and stalled and come back down. So 136.17 is our resistance today. Call it 130. We'll call it 136.20 for the sake of a round number. And we've come down in the last hour. So that's our that breach of that yellow line there takes us out of this long position. To go short on this strategy, the blue line needs to cross under the yellow line, and then the price needs to cross under the green line as well. So just two triggers there for it to happen. But the 20-hour moving average is all the way down there at 135.40. So again, that remains well bid to the upside, but we are quite stretched. And look at that, the stochastics there. See how oversold in the oversold zone we've been. The RSI went to 75.50 into the oversold zone for an hour or two before we came back down, but still ticking up again. Still momentum to the upside for cable on the 1 hour time frame yarn, my friend. Hope that answered your question. Raphael, hello. What's that picture? Can't see your picture there. Can't see what you're saying. Is this a long problem? Right, okay. Hello. Can you analyze pound against the Aussie? I certainly can, my friend. So, pound strong, Aussie very strong. We had some really good, strong jobs data out of Australia last night. Came in at, I think it was like nearly twice expectations. It was expected to come in about 40,000 new jobs. Came in at 90,000 new jobs. Very strong Australian dollar. And the dollar itself, the Australian dollar, has rallied very, very aggressive. Best performing currency overnight. It was over 0.76 against the US dollar. Really strong overnight session. So what am I looking for? Pound and Aussie. Let's go to this. I need to go to my different setup. British pound and the Australian dollar. So this is different chart setup. This one, there's a lot of, actually too much on this. I need to tidy this up a bit. But basically, the gold line is the 200-day moving average. This is a daily chart. The blue line is a 50-day moving average, and the yellow and the midpoint of the Bollinger Bands, that 20-period moving average. So we're aligned short, basically, for pound against the Oz. So the Aussie is stronger than the pound. So the 200, 50, 20, all nicely aligned short. We had this big sell-off this month recently again into the key 175 level, which is our low, taking us back to September low here. And we bounced off it aggressively in September. And we've done the same here from mid-December. So we bounced off, but it remains short because we're under the 20-day. We need to get back to 180 if this is going to move up. But again, big sell-off here, big strong Australian dollar rather than weakness in the sterling, to be honest, there on the 12th, not the 12th or the 10th. So 10th, wasn't it? 10th, it was last week, 10th of December. So that remains short. Ade, are you, what time frame are you interested in, my friend? But anyway, I'll drill down the time frame. So let's zoom up. So as you see, we're saying the daily is short because we've got 250, 20 there. We had a big volatile move down. We've bounced up quite aggressively this week. Looks like that's looking okay. 4 hour will be positive. There we go. We gapped here. When was this? This is Monday morning. So we gapped here on Monday morning. That was the news that the Sunday cutoff for the EU-UK trade deal wasn't happening. So sterling got a massive bid on Monday, and that's sort of what happened here on the 4 hour. Interestingly, it didn't break the 4 hour time frame until till late on Monday afternoon, till sterling traders got full hold. So interesting. Then it ran to the 50 hour or 50 period moving average here on the 4 hour, but it can't get over R1. So that's our resistance, 178. What's that? 178.97. So that's 179 basically, isn't it? Let's just put that on there because that's a nice fat round number where our R1 sits today. So 1.7, yeah, that green line there, 1.7, that's our resistance on the 4 hour, and also a key resistance daily because it's the R1 resistance. Today we got support clearly. In fact, not just today, that's the 4 hour, isn't it? So let's put that support. So got 2 green lines on there. So that's our support on the 4 hour. We've ranched up and we're sort of oscillating now between these 2 ranges. So if we go down to the 1 hour time frame, Ade, I say I don't know what time frame you're interested in. People pitching for business, teaching people how to trade. It's very good. So here on the 1 hour time frame, we now introduce the 200 hour moving average, and we're literally, you can see that this is a classic example of an oscillating pair, Ade, which is what you're asking about. So here we are, we're oscillating very, very significantly. So here on the 1 hour, we've got same resistance on the 4 hour. We've got the R1, which is the daily R1, remember, so it's a big fat resistance from yesterday. And it's a tighter range today. So today, if I put the daily range today, if I change the color, make that make that bright blue or something. Hopefully you can see it. Tell me if you can. Tell me if you can't. Let's make it aqua. So that's the 4 hour resistance, the green line. The 1 hour resistance today is this one here, the blue line now, 178.50. So we need to break that if we're going to go higher. Close. And really, if I zoom this up, really today, although we've pitched down to the bottom of the Bollinger Band there, if you want to be conservative, that really is the support on the 1 hour, the bottom of the Bollinger Band. But really, that 50 period, we've got 2 here on the 1 hour. We've got the 50 period and the bottom of the Bollinger Band. So that's just below our candles today. So the floor of the channel today is round about there. So that's the top for 1 hour traders is 178.51.6, and the floor is 177.89.6. So call it 177.90. It's the floor for pound Aussie today, and we're literally halfway between it. So first resistance is the 50 period, that's holding at the moment, and resistance to the upside is the pivot point, the 200 hour. So it's rejecting that at the moment. So we're moving down. So if we break this, where are we? We've got 15 minutes to complete before, and that would suggest that candle finishes with that small body and that huge wick, that is more pressure to the downside. So the next target you might want to be looking at is that 177.89, 177.90, and then the S1 there at 177.69 to the downside. Ade, my friend. Oh, you can see it. That's what we're saying, right? Oh, well, that's how I see it so far. I mean, it may burst out of these channels, but as you can see, there's some key resistance is at the higher level. So the 4 hour resistance also comes in at this S1 level here at 177.72 is what we said. Yeah, so the green is the 4 hour. Let me just recap that. So the green lines are the 4 hour resistance. The blue lines we've just marked in as the 1 hour resistance, and then these R1s and pivot points and S1s and S2s, they're the daily support and resistance levels as well. So that's where we go. Ravi's asking for oil. Well, it's just long, my friend. Don't fight it. Don't fight it. Oil is, in a very big. Excuse me. The big surprise for me, I think it was earlier this week or last week, I can't remember, that oil didn't go down when we had some negative news for it. It just kept going up. So oil, the last time I looked, it looked very well bid, and I don't suppose that's changed much since then. We had private inventories, which was a bit of a draw, but we had but we had a bigger drawdown than expected yesterday in the official inventory. So a drawdown suggests that there's demand there, so that normally pushes the price up. Drawdown means there's less inventory left in the stock in the inventories than expected. The inventories that are held in Cushing in Oklahoma is where the US inventories are. So let's just have a look at 4 hour for US oil. So let me use this setup for the oil market. So just bear with me while it runs in. Ravi, my friend. So US oil, let's go to the 4 hour time frame. So again, you can see here Very well bid over the big fat yellow line I've put in here is $45. The $5 handles, the fives and the zeros are very significant, particularly in the oil market and things like the gold market, the commodity markets, just the way they're are traded, to be honest. So the $45 is the big support area. And as you can see, we've breached $45 here on the 12th. Sorry, but the beginning of December, and we haven't really looked back. So that's been a key level. So back on the 3rd of December, Ravi, we broke $45, and that's been a level that we, and the support has just ratcheted up. As you can see how we've moved up and ratcheted up. So we got S3 now sits at 46.65. So call it 46.50 for the sake of the 13 cents. But it's bid, and here we are this week, another strong move. Obviously can be quite volatile. Look at this big wick here. So, you know, the stop loss being too close here, that would have stopped you out. But enough, you know, you would have still really been in that one. So as a trend following trader using this particular strategy, it's on the chart at the moment, this 4-hour trader would still be, he'd be long again. So we were sideways here. This is a great example here. Look at this. This is a great example of when not to use moving averages. Because there's no direction, they're flat, and that's what moving averages do. They're lagging, they're late. That's one of the big criticisms, but they're great for catching a trend. And you know, they're simple, they're straightforward, and you know, they as effective as anything I've ever seen. That's much more complicated, has much more maths and algorithms involved in it. Anyway, so the last big break was this one here as it broke out of that channel. See, that's what was happening with channel bound. Then we rallied up. So that's rallied up. Would have taken you out there, but we're still over the 20 period. So trades to the long side because we're north of the 20 periods, and they're still aligned. They haven't crossed. So you could either got out and got back in or just stayed in it because we were still above the 20 there. We tested the 20. We'd gone under the we'd closed under the 9 period there, but we hadn't gone short, although it come all the way down here. We didn't close the period, the candle underneath the 20 period moving average. That sort of candle is a great example of, you know, if you're trading that as a 4-hour candle, if you've been watching that, chaps, you know, and I've done it myself in the past when I've been trading, you know, you would have panicked probably. As the price came down here during this 4-hour candle, you'd have panicked, no doubt. I don't know when this is. I don't know, is it middle of the night or not? No, it's during the day. So it's the 5 o'clock to 9 o'clock candle. So it's over the close of London. US is still open, so a bit of a hiatus. We've gone down. Some news obviously drying, but we closed the hour positively. So from all that low here down, all the way down here at 50, 45, 60, we closed all the way up at 46.80 zone. So have patience, have discipline. Don't make a decision until, you know, your candle is closed on the time frame that you're trading. So as a 4-hour trader, following this strategy, you're still long and have been for a while. You've got lots of pips in the bank, and it's just rallying. You know, dip held by the 9 period, held by the 20 period, and it's, you know, nicely. We've come down under the 5 period at the moment. We might be testing the 9 period at the moment, but clearly today, earlier, we've stalled here at 48.40. Not surprisingly, in fact, you know, next, you know, the big round psychological number would take us to 48.50 is where we stalled. There we go. Let me just put that on there for later when I come back to have a look at it. So 40, I'm going to make a note of it. 48.50 is our current resistance. 55 up on there. Call it 50. So, you know, strongly bid. And remember, you know, when you're trading oil, you know, you're trading down here at this cent level. So 6 cent spread. Nice rally here. So again, holding bid to the upside. And Ravi's just said here, everybody, Ravi's talking about possible may go to $60. Well, it may, but obviously the first target is that, you know, one big one before that is the $60. $50. $60 are still a long way from here, Ravi. But if we go to the daily time frame, you see it's bid. We've got the weekly time frame. Let's zoom this in, bring in your time frame. So your $60 is up here. I mean, it's not out of the question, obviously. We were last at $60 back here at the beginning of the year, wasn't it? When Israel were involved obviously, but Iran and the US went head to head, so $60, bit of a strag. As you can see, our 50. This is the weekly. Remember, our 200-week moving average sits at 51.20. So that makes the the 50 level. That makes the 50 level even more, critical. It's a key level, but the trend, remains up. And here you can see on the daily time frame that breached the using the same strategy. End of day traders have been long since the 9th of November and haven't looked back. So all of November, all of December thus far, or most of November, so not all of November, we've been long over the 200 days, all the way down here at $41. So US oil remains bid quite nicely. I mean, it could come down quite quickly as well, but it's a key demand time of the year as well now, the cold winter in the US, but certainly bid to the upside. Imran, I hope that answered your question, Ravi. I guess when you talk about $60, I guess you're talking about the higher time frames. Sorry, let's go back to Ravi. The higher time frames. But yes, I mean, it's bid. I say that's the daily. We looked at the weekly, didn't we? Weekly's bid, and your $60 is not out of the question, certainly. But we've got to obviously get to 50 and then 51, where the 200 week is, certainly. But you can see we sold off really aggressively as the pandemic gripped the northern hemisphere and the western hemisphere. That crazy contract closing negatively. I mean, millions was made by some options traders as the oil price collapsed all the way down to less than $5 on it. It went negative actually on the futures market. But crazy times. And now here we are back at $50 to close the year out. Who would have thought that in the angst of March, eh? But $60 maybe on the cards for 2021. We shall see. Imran, just hello, Imran. Good evening from Fernandez. Fernandez, good evening, wherever you are. Stay safe, my friend. Alex is saying good evening as well. Hello, everyone. Alex, Kenny, Dixon. Hello, everyone. Good evening, wherever you are, everyone. And Ravi says thank you very much. That's not a problem. That's what I'm here for. So, any other assets? Anybody? What was I prattling on about before we started to look at oil? Euro, wasn't it? Yeah, Euro very strong over 122, 122.50 is the rule. Dollar yen, on the other hand, going in the opposite direction. We're under 104, and we've been anchored under 104 for a while now. We came down to test it under, and then we couldn't break it, and it's just, we've fallen down really aggressively this week, very significantly under 104, 103.17. That was a low that I'd put in earlier today, and it's already breached. That's a 102.99. So we're breaching 103, ladies and gentlemen. Dollar yen 103 has been hit and breached. The low, the high. This is the 1 hour time frame, chaps. The hiatus that we had in March took. I'm going to zoom that in. Took the. Where am I? I've lost my. This is daily. I need to go weekly. That's why. Zoom this up a bit. So the freak out we had in March for dollar yen here. Where we went down to 101.24, that was just the intraday, movement. But you see, it was a positive. That was as we were going down still for these 2 weeks and then a few days of this week, and then we reacted really aggressively. We went back to 111. That seems an awful long way, isn't it? But since then, it's just another one that's just trended lower, hasn't it? Look at this. Hope you can see this, but this is dollar yen on the weekly time frame. So the weekly dollar yen pair has been under its 20 period moving average since the beginning of June. This is the 6th or the 7th of June here. We had a week up over the 200 hour. Looked like it was moving up because we had 4 weeks up, 3 weeks up, and then a big 4th week up. Looked like it was going to move back up, retest 110, perhaps push to 112. And then it all shook out, a big engulfing candle the following week, and it hasn't looked back since then. So the close of that week closed at 107.30, and here we are all the way down here, 5,500 pips later at 103. Obviously, many weeks later, 26 weeks later, 6 months later. But this is how, the big players, the big trend followers can often trend and trade these markets. So, profit's not a profit till they close the trade out, obviously, but these are the sort of trends that are in play. And as you can see here on these higher time frames, the 200-week moving average is all the way up there at 105, and here we are 200 pips lower at 103. So the trend remains very much to the downside for dollar yen on the weekly. The daily is the same, but obviously more volatile. But certainly another 3-candle bearish black crow pattern forming there as we've shook out today under 103. And again, the writing's been on the wall for a long time as a trend following trader. That MACD's remained under the zero line and looping lower as we continue to move down. So dollar yen remains weak as well. I mean, the dollar could bounce back quite aggressively when it does and quickly, but at the moment the trend is running, and it's running lower, dollar yen. Ravi says, thanks. Paul, wow, that's all right, my friend. Trend following looks easy when you look back on it when it's happened. What you do, you need a system and a strategy to put in place if you're a trend follower. If you can, wait and sit and buy, but you've got to trade. I say this all the time to everybody. You've got to really trade at the time frame that fits your personality, Paul, and and understand the basics of spread and margin and leverage, and make sure you understand risk management, understand the asset that you're trading, understand the spread on something that you're trading, understand sometimes the time frame you're trading. Sorry, when I say time frames, I mean when you're, if you're trading intraday, be aware of some news items that are coming out. An end of day trader, for instance, wouldn't be particularly interested in the news during the day, because all he'd be interested in is looking at this chart at the end of the day. So yesterday, he would have looked at it and think, oh, look at that, it's short. But I've been short. I went short here using this strategy. I was short there, still got taken out. I've been, again, I'm just using this as an example. This one strategy. This guy at the end of day guy, he's been short since this closed just at 104 on the 11th. When was that? So 1, 2, 3, 4, 5 days ago. And, he looked at it then, that wasn't very good. It looked like it was going with him very much during the day, didn't it, that day? But it didn't. It virtually closed where he'd entered. But the following day, here on Tuesday, we were nice big down day. So he's very much in profit. He was in profit again yesterday, Wednesday, and he's in profit again today. So at the moment, he's still short. He's either moving his stop loss down, depends on how he's running his stop loss, or he's added to his position, perhaps because we've had 3 strong days. He might have added some last night, or whatever his strategy is. But that, it's that really. You just got to keep it as simple, and that just happens to be the day. You can have the same setup if we go all the way down to the 1 minute chart. Obviously, the problem with comparing the 1 day to the 1 minute is obviously the targets are much closer. The charts look the same. You don't know that that's a 1 minute chart. I've just told you it's a 1 minute chart, but the rules are still the same. So here, that a minute ago, this was going short, and now that's just gone long using exactly the same strategy. So that, for instance, dollar yen, for the 1 minute trader, the scalper, he had a strong bounce here from whatever that was, and he's just gone long now, and he's running it. He's obviously got some resistance there at that 200 hour, or 200 hour, that 200 minute moving average is just as relevant. The 200 moving average in the 1 minute time frame as it is in the daily and the 1 hour on the time frame that you're trading. But the 200 minute moving average is completely irrelevant to an end of day trader, because it's in the irrelevant level. But here as a 1 minute trader, it's moving. But obviously the movement here on these candles is much less than the like the 3 white candles we saw on the or the 3 red candles we saw on the daily time frame. Obviously, we're only moving a few pips, if a pip. So we got in here at 103.02 and a half, and it's gone all the way to 103.05. So you may 2 and a bit pips, but the spread, if you would have perhaps taken it out unless you got a nice tight zero spread account, which you might have. So you made a few pips on that already, but that's a resistance. So. But it's long still following that strategy. So it's all about, Paul and everybody else, about following a strategy, having a strategy that works for you. And I'm just saying this is just one example. There's lots and lots of strategies kicking around that work. And lots of strategies work well enough. People are always looking for, and I'm worried about an entry, I'm worried about an exit. Where do I put my stop loss? Where do I put my take profit? I don't use a take profit. I don't use a stop loss. I don't believe in them, all that sort of stuff. So again, it's all about what's between your ears, what's between in your head. It's a mind game, mindset, this business, and treat it like a business. You've got to treat it as a business, profit and loss. When you're losing, loss is too small, get out. Too big, I should say, get out. Just accept it. It's what happens. Don't hang on to losers. They tend to get bigger, is what tends to happen. But anyway, down we go. I haven't actually looked at the news. I was going to talk about the news. So let me just check the calendar. The big news was at 3:30 my time. So 30 minutes ago, we had the jobless claims. And yet again, they're worse than expected. So US jobless claims, worse than expected. 885,000. They were expected to come in around 800,000. I thought they were going to be better than that, but they were worse last week. They came in at 875 last week. They've been 835 last week. They're worse again. They've been rounded up to 864,000. So it's, as I've been saying for months, the unemployment situation is the key global problem. So that's gone up 10,000. The numbers missed by 85,000, so 10% miss of the expected 800,000. So again, a big miss for new claims. So this is new 885,000 new Americans claimed job seekers allowance for the first time, or jobs claims allowance. They need to get that stimulus package sorted out. The 4-week average has gone back over 800,000 to 812,000, but the continuing claims has come down to 5.5 million, just above 5.5 million from 5.6 million. So that's a wee bit better. The longer term is drifting downwards. But the revision from last month has been revised up to 5.78 million from 5.75 million, so 300,000 up for the long term. So it's a big, big problem. 800,000 and 885,000 new claims this week. There's some questions about how they were being calculated and measured, particularly in California, but that's sort of worked through the system now, and it's still a significant number. The other key data out of America has been the Philly Fed index. It's not as significant as it used to be. It used to be quite a very significant indicator. The Philadelphia Fed manufacturing survey for December is coming at 11.1. It was expected to come in around 20, so it's a significant. It is a very volatile number, so the number looks massive difference, but it is, it's virtually half expectations. And last month, it's 26.3. Things were looking forward and up. And this has been a big, big miss at 11.1. So more pressure on the dollar, hence dollar yen heading to that 103 that we've just looked at. There's also, apparently today, there could be some COVID-19 announcement from the FDA. So watch that as well later on. So the US data, claims and continuing claims continue to hang and miss in particular. But on the other side, the housing starts and the building permits beat expectations again. For 1.547 million new housing starts for November, and building permits are in even higher at 1.639 million, above expectations. Both are expected to come in around 1.55 million. Anything over 1.5 million is a big positive number. So crazy housing at record highs, and yet unemployment still record highs as well. A very divided United States as we move forward into 2021 still. So crazy numbers there out of the United States. Right, while I've been away, let's have a look. Emilio asks, will the Aussie dollar, will it go back down? Well, it'll go back down eventually. I don't know about today. Again, Emilio, that's what trend following does for you. You have some rules. Look, it will run out of steam at some point, because that's always what happens. But again, will it go back down? On what time frame? Well, let's have a look. The higher time frame, the daily time frame. Look, it hasn't gone down since it started going up. I know it sounds a bit twee. But that's what's happened, and that's what happens with trends. They can run and run and run. So here we were chopping sideways. First sign was this big candle here back at the beginning of November. It sort of, it was no, you would wanted it to break through, but 3 days later, three strong candles that had broken out of this congestion we'd been in for September and October, and then the big follow through took us all the way back to the summer high, and then it went sideways there, and then it broke out again, and then it's just ran since the major breakout from here. So it's ran and ran. It will stop running, but again, as a trend following, using the 20 period moving daily moving average as your key trigger, it broke the 20-day moving average there, as I said, the 3rd of November, and it hasn't looked back. Here we are, the 20 whatever it is of it's not these what I'm talking about, 17th of November, 32 trading days later, we're still trending higher, and we haven't closed under the 9 period moving average, that yellow line, and we've only occasionally closed under the 5 period moving average. But the rules are on this particular strategy: get long when the 5 and the 9 cross and we close over the 20 period, and remain long while they're all aligned. That means the 5, the 9, and the 20 are all in order. The 20 is below the 9, and the 9 is below the 5, and they haven't crossed at all. So just stay long, trail your stop loss up, get in. If it comes out, if it takes you out as it comes back, stop loss comes back out. Big strong day there, whenever that was. Big strong candle there above that congestion zone there, over 75 on the 10th, and off we go, and off it goes. It's now over 75. It's over 76. So you'd argue it's overbought because we're at 79 on the RSI. MACD still trending quite nicely up to the upside. Stochastics is still in the overbought zone, but the trend remains very much with it. I've got an ADX on here, but the strength of the trend, if we put an ADX on there, would show the strength of it. So Aussie remains up as far as the trend. It will come down at some point, but at the moment it's moving higher. Emilio. Ranson, please, I want you to analyze the pound cable for me here, because since 2019, we'll see it move to 116 and now move to pound 116. What do you mean? Ranson, do you actually mean 116? I mean, we went to 114. You've obviously typed something in not quite correct in there. Let me just try and use this. It'll get a bit congested if you're not going back to one. Actually, let me go back to the. Where's my pound crosses? Here we are. It's been very volatile. Once remember 2016 was when the UK voted to leave the EU 4.5 years ago now. Let's just bring up some of these. Actually, there we go. This is just a different setup. This is the Heikinashi candles. This particular setup. That's the blue whites. Let's just use the Heikinashi ones for instance. I posted this earlier today. This is the weekly on the Heikinashi, and as you can see, we've last leg down took us from back in September to this low in October of around about 126. Now we've breached that. We've breached that at 135. So where do we go from here? Well, the Fibonacci extension of that last leg down would perhaps take us initially up to this 140 level as well, this 139.95. So 140 is definitely potentially on the cards from here. I'm not saying definitely, it's potentially on the cards. This is the weekly, remember, but 135 obviously needs to hold as this continues up. You were talking about this is this 114 level here we went down to in this year, but you're talking about 2018. So let's zoom in a bit. This is that 114 level. I'm not sure what you mean by 116 for pound dollar, my friend. If you want to put some more detail in that, certainly. Emilio's talking about the 1 hour time frame on the Aussie. We'll come back to the Aussie in a minute, Emilio, if you don't mind. Okay. But let me just answer this for Ranson. Ranson, if you want to put in the time frames, because I'm not sure what you mean by 116. Okay. But as you can see, this is cable, and what we're talking about, yeah, cable, and you're going 118, 2018. So 2018 is we're sort of back here. You're talking about once, I don't know, but we've been down and up, and at the moment we're certainly bid from the middle of September here on the weekly chart. If we go to take this to the monthly time frame to get to your 118. This is zoom up a bit. You can see how much we've come down since 2016. But this is the monthly chart now, taking you back to your 2018 area you were talking about. This is the beginning of 2018 here. So we've moved down. So that's that 140 level we just put on our extended chart, on the monthly chart, that 140. And then the 261 takes all the way back to there, 147, which would take us back to the hideous month of the Brexit vote, where we were up at 145, 150 at one point. Ranson, if you want to explain a wee bit more, what I will have a look at it again if you want, my friend. Okay. Kenny is saying, what's your say on pound dollar? Well, here it is, Kenny. It's looking. This is the daily time frame. Let's zoom in. This just happens to be the Heiken Ashi candles rather than the normal candles. But anyway, you can see strong white candles here. Very volatile, obviously. So be careful if you're trading any sterling traders out there. Be very careful trading it because of the news. You need to be aware of the news breaking. But what's pricing in here is the market is expecting a deal between the EU and the UK, which is why sterling's strong. This is we've got a weak dollar as well, so we've got a strong sterling, Great British Pound. We've got a weak dollar, so hence the trend continues to move up. So we've had 1, 2, 3 white candles here. Strong day again today, over 135, over 136 earlier today, and continuing to rally. That pair, so that looks relatively well bid. Emilio was asking about the Aussie on the 1 hour, wasn't it? So let's go back to the Aussie. Has it run out soon? Well, it may have. It's not going to run forever. But here intraday, let's use the same rules we were using before. Let's go back to this setup, the crossing EMA strategy. Where are we? We're here. Aussie, wasn't it? Aussie you were asking about. So the daily remains very, very strongly bid. So remember, if you're going to go short, you're going against the trend. The 4 hour bid, consolidating bid, big, strong candles earlier today, a big, strong candle earlier today, cooled off significantly. And there will, the lower time frame, there will be a bit of a rollover, and that's what we've got here. So zoom up, we can see here for the 1 hour traders, it's topped here at this one at 76.35. So we couldn't really close above that for 1, 2, 3, 4 hours today, and then we've moved down the last couple of hours. So it's but again, using this strategy, Emilio, this blue line needs to cross under this yellow line, and then the price needs to cross under this green line. So that's still long. So at the moment, long traders trading this particular, I'm just using this particular strategy on the 1 hour time frame. They've been long from yesterday, as we said earlier, and they're waiting for that for the price to close under this yellow line before they get out. If they've been using this, that's one way of tracking this strategy. Another way is using the ATR and trade and trend up. Another way is to just as you open your position, you put your stop loss down here and then trail your stop loss up. So I would guess, again, a lot of these trailing stop loss traders would have been taken out now. So, yeah, we would have been probably stopped out now up here. So let's say we're using the lowest low of the last 4 or 5 candles. So that's the current candle, 1, 2, 3, 4. So our stop loss would have been, up here, and we'd have been taken out. So again, trend following trail stop trailing stop traders would have been taken out as well. Those that are using this particular strategy are still in it, are still long, so because it might bounce off this and move up, or it might plummet through it really aggressively. But that's the rules of the strategy, and you've got to stick to the rules basically. So there we go. It still looks long. It has rolled over in the last 2 or 3 hours, but it's had 2 hours down now, 2 quite significant hours down, but nothing compared to the move up. So we'll see where we go. Remember, it's still that. I mean, the cash session in the US is just opening now, so you may get some bid on the dollar as we've seen here ahead of the cash session, but it's still 15 minutes before the cash markets open in New York. So there we go. Who's next? Lewis is asking about the gold market. Lewis, we talked about this earlier. You obviously weren't here. Victoria saying, how can I get this video saved on my phone? It's on our website, Victoria. It'll be my colleague is posting this to our analysis. But I'll come to you in a minute. Actually, Lewis. Actually, let me just speak to Lewis about the gold market. So gold, Lewis, has had a strong. If you weren't here earlier, you can see we're in a third of a very strong move up today. So earlier in the week, we were down here testing 1820. Tuesday, Wednesday, and now Thursday, 3 strong candles. That candle formation, 3 white soldiers, as it's called, positively moving up because the open of the close of day 1, we opened and we closed much higher. Day 3, we opened at the close of day 3, and no gap or anything. We moved up. We're over the 50-day moving average. That's a strong. If it closes up here today. We're at the extreme of the day here at R3 at wherever that is. What's that? 1892.75. I don't think we've got that quite high, but we're at 1880. We're at 1887 at the moment and moving high. So that's a strong daily candle formation. The 4-hour again, Johnny. I don't know what time frame you train, but the 4-hour again, another one that's been long and still long from that break there. So the 4-hour traders. Trend followers have been long from 9 o'clock yesterday morning. Thank you very much. They went long. They went long there at 1840. They've got lots of pips in the bag, haven't they? Over the 50-hour, over the 200 period moving average, and just long. We haven't closed under this 9 period, have we? So again, another one that's long and going longer. Bad looks things like 4-hour trader and the 1-hour traders messing about a bit earlier, but again they've been long. Down, went sideways, but again they've been long from yesterday just before close at 2200 hours around whatever that is. Let's get that in it. So 1-hour traders have been long from 1861 and continue. So that's bid. We're through R1, through R2. We've tested R3. It's still bid. It's still up. So gold remains long on the 1-hour time frame. Lewis, my friend, Johnny Lewis. Victoria, hello. Hope you're well. Don't be sad. Don't cry. There's no need to cry. How do I get this saved on my video? Well, we do this once or twice a week at least. We do live analysis webinars as well. So join us on our live analysis webinar. I can't show you the website on here, unfortunately. I'm just sharing this. I only share this app on this page. But come to our website, hotforex.com, www.hotforex.com, which is how you got to hear us here anyway, Victoria, because you've come on our Facebook page. So it'll be posted on the Facebook page as well. It'll be posted on our main web page and also on our analysis page. So look under technical analysis or the analysis page, the education page, it'll all be on there as well. But we do this all the time as well. So don't be sad, Victoria. Smile. There's lots of things to smile about. We've had a horrible year and we're all still safe. And I hope you're all still safe. So, Ravi, BTC is at all-time high. It certainly is. This time yesterday, it broke 20,000 for the first time ever. We went through 21, 22, and I think we were even above 23,000, weren't we, earlier? I don't know. Let's have a look at where are we. Here we are, 23,000. Look at this beast. This is the daily time frame for Bitcoin. What a December we've had. Just like 3 years ago. Is it 3 years ago? Yes, 2017, wasn't it? 23,100 at the moment. So again, trend following. It's just got beefier. It dipped down, got you back in this morning, and off we've gone again. It's just this is 1 hour time. This is the daily time frame. So huge rally this year, and again another one. Looked a bit hiatus, bit of a shakeout here. The story of MicroStrategy being sold off, oversold. It was perhaps 17,000 here at the end of November. Dipped down here just last week here to 18,000, but bang, since then, all talks of big whales buying and holding. Excuse me. And again, another one that's been way over its 20-day moving average. I mean, it's a volatile asset at the best of times, but what a run this has had. Again, if we look at the 20-day, we went under it there just for one day there on the 11th of 12th of December on Friday. It looked like it was drifting down all last week, but that was just shaking people out. And then a big gap over the weekend, and off we've gone this week. But before that, the trend had just been running really nicely. We'd ran here. We'd broken out of this congestion zone here at the beginning of October. We broke out of the congestion. The first trick was here. Well, I'll zoom this up. I don't know if it's going to stay on. Yeah, it is. So that was the first one back above the 20 period. Excuse all the lines. This is the 1 hour time frame with lots of. Now we broke out of the congestion channel here, the 12th of October. Now it's just rallied. Then we had this story of PayPal accepting cryptos here, the middle on the 21st. That was the big break, the big push to 13,000, and here we are, $10,000 higher again at 23,000 just here in the middle of December. So big move for Bitcoin, and again, as a trend following asset. It's volatile. It would have stopped you out here, but you would have got back in here, stopped you out there, but, got back in here as it's gone back over because the moving averages have crossed back over there. So, again, you'd have got back in here on the 14th as they've crossed, and you're back over the. In fact, no, it was the next day, wasn't it? It was here when I can't zoom that up, but you can see they've crossed there on the 15th. So you've captured those two, yesterday's and today's move. Because we've back over the 20 period, and the 5 and the 9 EMAs have crossed as well. So, Bitcoin runs and runs. Celia, hello. Hope you're well. Hope you're staying safe. Hope you and your family are well. Amir, hello. Hope you're well as well. Right, I've been talking for an hour and a half now, ladies and gentlemen. I'm running out of steam a bit, and my glass of water has ran out. So I'm going to call it a day if you don't mind. Just to recap the news, weekly claims have missed. Here we go. I was going to say, let me just recap the news, and then somebody always asks for something else. Emilio, he asked before. How is pound yen expected to move? Well, it's bid, my friend. Sterling is strong, but yen is relatively strong as well. Sorry, no, yen is being weak, but so sterling's strong. And again, I think you asked about 1 hour before, didn't you? So. It's running out of steam a bit, isn't it? It's sort of consolidate. It's going up in steps. So we broke here on Wednesday. We broke the 200-hour moving average again, and again here we didn't know what was going to happen here because we'd been up there, then we went down, then we moved up. So that was the last break of the 200-hour. But again, looking at the 20-hour, that 20-hour has kept you strong. It's kept you right side. We're back to test it for a few hours here, and we're back to test it again now. So we've broke 140 today. We've held it for 1, 2, 3, 4, 5, 6, 7, 8. Is that today? It can't be today. Oh, yes, it is. 17th, isn't it? Yeah. We broke it for 5 or 6 hours. We tested under it here 2 o'clock, 3 o'clock, as I was starting to talk. 3 till 4. It's been, as I've been talking, we've been under it, but we closed back over it, and now into this hour with half an hour gone, we're back under the 140. So it's moving down, but the 200 is still holding. So we've been long, and that's crossing. If that crosses here, that may be a short position on this strategy to take you down to the pivot point. I'd be reluctant to take that any lower than that, but it's that if we still look at the higher timeframes are still bid, although it's stalled at that 140.14, the 4 hour, and the daily time frame is still bid, and it's the third of a strong day. But again, you see we're sort of topping out a bit. So again, if you're trading that on a 1 hour time frame, Emilio, that looks to be rolling over. The shorter time, the 15-minute, for instance, the lower time frame will have already rolled over. And there we go. See, sort of rolled over, but chopped back. But again, your stop loss if you'd taken that short there, your stop loss should be up there, so you're still short on that, on the 15-minute moving down. It's broken that low there, so 15 minutes moving down. But again, it's all about the time frames that you're trading. And finally, let me say finally, because I am really tired now, Ravi. Great job, bro. Great, bro. Have a blessed afternoon. This is morning time in Trinidad. I've never been to Trinidad, Ravi. I love my cricket. I'm a Yorkshireman. And I'd love to get to Trinidad. I've been to Barbados, I've been to Jamaica, but I've never been to Trinidad. So we should come and meet you. Oh, I should come and meet you one day. Okay, my friend. So thank you very much. Have a great day. Thursday is just dawning in Trinidad for Ravi. So take care, my friend. Austin, hello. I'm just about to go, Austin, because I'm tired and I've been here an hour and a half. So take care, my friends. And yeah, everybody have a nice day. Everybody stay safe. The pandemic is still with us. In the Northern Hemisphere, we're in the middle of the winter time. It's the winter solstice on the 20th, so just 3 days away. We're at the bottom of the winter for the Northern Hemisphere, the top of the summer for you guys in the Southern Hemisphere. But the vaccine is around. It's available. It's obviously, unfortunately, it's only currently available in the rich world, but it is getting rolled out there. And it's a lot of these vaccine developers have made it free for lots of countries. So let's all stay safe and let's all meet up in the not too distant future. So take care, everyone. Thanks for watching and stay safe. All the best, everyone. Bye-bye.